Welcome back to Tesla Daily News Podcast. Today is Saturday, April 18th, 2026. We've got a big earnings week ahead for Tesla, fresh signals on demand and competitive pressure, and a couple of headlines that could move sentiment even if they don't change the fundamentals. Let's break down what matters for investors, what's noise, and what to watch next. Story 1. Tesla earnings are coming, and next week could reset the stock's narrative. Here's the hook. Tesla reports results next week, and the market is treating it as a key catalyst in a risk on tape. Context. In this market, Tesla tends to trade less on what happened last quarter and more on forward guidance. Investors are looking for clarity on vehicle margins, Cybertruck economics, energy storage momentum, and the pace of autonomy-related revenue. Details. Multiple market agenda pieces flag Tesla's upcoming results next week, and broader U.S. market previews list Tesla alongside other major reporters like Intel and American Express. The implication is simple. Tesla is back on the big week board for institutions, and that usually means higher volatility and faster repricing. Impact. If Tesla reaffirms demand, stabilizes gross margin, and shows progress on software and energy profitability, that's supportive for valuation multiples. But if management sounds cautious on pricing, demand elasticity, or Cybertruck ramp costs, the stock can sell off even in a strong market. Takeaway. For the next few sessions, it's not just about the earnings print. It's about guidance, commentary on pricing, and whether Tesla can frame the next 12 months as a margin rebuild story rather than a volume at any cost story. Story 2. A report suggests Cybertruck sales may have been boosted by SpaceX purchases. Hook. Cybertruck demand headlines are getting complicated, and investors should separate end customer pull from internal ecosystem buys. Context. Cybertruck is strategically important because it's a new platform with new manufacturing methods and potentially new margin structure. The debate is whether Tesla can scale it profitably and sustain organic demand. Details. A Financial Post report cites online photos and videos showing rows of Cybertrucks on SpaceX property in Texas. It also points to prior reporting that SpaceX could ultimately buy around 2,000 Cybertrucks, with at least some used as security vehicles. Impact. If true, internal purchases can help smooth early production output and reduce inventory pressure, which can look good in quarterly delivery optics. But investors may discount those units if they believe it inflates real demand signals, especially if the broader EV market is price competitive. Takeaway. Watch for Tesla to disclose any meaningful related party or fleet-style concentration in Cybertruck demand, even indirectly. The key investor question is whether Cybertruck is finding broad consumer market fit at current pricing, not whether the Musk ecosystem can absorb early units. Story 3. Tesla is expanding officially into Estonia, adding a new small market with supercharger momentum. Hook. Tesla just announced it's starting operations in Estonia, and the near-term story is less about volume and more about infrastructure-led penetration. Context. Tesla's European strategy relies on a combination of manufacturing capacity, local ordering and service support, and charging network convenience. Small markets won't move global deliveries materially, but they can boost regional density and brand presence. Details. Estonia reporting says Tesla will launch an in-country web configurator on April 24. It also highlights existing supercharger presence, 8 stalls in Pärnu and 8 in Tallinn, with Tartu planned next. Tesla frames this as the first physical store presence via a pop-up concept while continuing supercharger expansion. Impact. In the short run, Estonia won't change consolidated revenue. But it's a sign Tesla is still pushing geographic coverage and lowering friction for orders and ownership. Over time, incremental markets can improve European utilization rates for service and charging assets. Takeaway. This is a fundamentals positive, but small expansion. The investor lens here is execution. How Tesla leverages the supercharger network to deepen market share in regions where EV adoption and cross-border travel make fast charging a decisive advantage. Story 4. Tesla's India strategy may broaden with a 6-seat Model Y variant, but tariffs remain the gating factor. Hook. Reports out of India suggest Tesla is preparing a longer 6-seat Model Y variant, and the big question is price after import duties. Context. India is a huge long-term EV opportunity, but it's also one of the toughest markets for imported vehicles because tariffs can be extremely high. For Tesla, the path to scale has historically required either local manufacturing or a structural policy change. Details. Indian reporting claims Tesla could introduce a Model YL, a 6-seat long-wheelbase Model Y, imported from Shanghai. The same report cites high import taxes, described in a range of roughly 70 to 110%, and notes Tesla's registered volumes in India were limited, with discounting used to move inventory. Impact. A 6-seat option can align better with Indian family use cases and may improve demand at the top end. But if the effective consumer price balloons due to tariffs, unit volume will likely remain niche, which limits the market's contribution to Tesla's growth story. Takeaway: India remains a headline driver for optionality in Tesla's valuation, but the investable signal is policy and local production, not a single imported variant. Watch for tangible steps on manufacturing, assembly, or a clear tariff framework. Story 5. Governance and Political Optics in Germany. A court blocks a former Brandenburg minister from joining a law firm tied to Tesla work. Hook. Germany is one of Tesla's most politically sensitive operating regions, and a court decision underscores how closely the public sector is policing appearances around the Berlin area factory. Context: Gigafactory Berlin is central to Tesla's European production footprint. While this legal decision doesn't change production, it touches the broader theme of permitting, public trust, and regulatory friction. Details: German reporting says a court rejected an appeal by former Brandenburg economic minister Georg Steinbach. He is barred during a cooling-off period through December 2026 from working for a law firm that previously advised the state on matters tied to Tesla's site development and later worked for Tesla. The court cited concerns about public trust and perceived conflicts. Impact: This is not a direct financial hit, but it's a reminder that Tesla's European expansion lives inside a high-scrutiny political environment. For investors, regulatory and permitting risk often shows up as timeline risk and cost risk. Takeaway: Keep your eye on what actually affects Tesla's Berlin output, capacity expansions, labor dynamics, and permitting speed. But don't ignore the soft risk. Political narratives can influence how fast Tesla can execute on-site improvements. Story 6. A darker headline risk. An entertainment crime story involving an impounded Tesla Model Y. Hook. Multiple outlets are covering the arrest of singer D4VD in connection with a teen's death after remains were found in a Tesla Model Y registered to him. Context: This is not a Tesla operational story, but it can contribute to social media narrative risk around the brand, especially when Tesla appears in headlines unrelated to vehicle safety or product quality. Details: Reporting says authorities found a decomposed body in an impounded Tesla Model Y, and the singer was later arrested on suspicion of murder. The case remains under legal review, with prosecutors assessing charges. Impact: The direct stock impact is usually limited unless the story morphs into a vehicle safety, data, or product liability issue, which it currently is not. But brand headlines can influence sentiment at the margin in an already polarized consumer environment. Takeaway: Investors should treat this as reputational noise unless regulators or investigators explicitly connect Tesla systems, product design, or data handling to the case. Now, quick market frame before we wrap. Risk appetite is improving as oil prices fall on Middle East de-escalation headlines, and that tends to support high-beta tech names like Tesla. Multiple market notes show Tesla trading higher in pre-market alongside other mega-cap tech in that environment. But that macro tailwind can reverse quickly. Closing recap. Today's big themes for Tesla investors are: 1. Earnings next week and the guidance that could reset expectations. 2. Cybertruck demand quality, especially if internal fleet buying is masking true consumer pull. 3. International expansion, with Estonia a small but constructive signal and India still constrained by tariffs. And 4. Europe's political and regulatory optics remain a constant background variable for Gigafactory Berlin execution. For tomorrow and the next few days, watch for any pre-earnings analyst notes, margin and delivery expectation shifts, and any additional detail on Cybertruck fleet allocation. And of course, stay alert for Tesla's own tone setting ahead of the results. If you found this helpful, subscribe to Tesla Daily News Podcast and share it with a fellow Tesla watcher. We'll be back tomorrow with the latest Tesla headlines that matter for the stock and the business.